In the fourth quarter of 2019, companies on the S&P 500 spent an estimated $189 billion buying back their own shares from the stock market. It was the highest in 3 quarters, but not the highest on record. In the final quarter of 2018, the number was about $223 billion, a high point on a decade-long trend. In all, since 2010, companies on the S&P have poured more than $5.3 trillion into repurchasing their own shares. Analysts say buybacks have been a driving force in the decade-long bull market, but there's some argument over whether they're good for the economy. Skeptics say the money used on stock buybacks would be better spent elsewhere, like building new factories or exploring new opportunities altogether. Meanwhile, proponents say buybacks are putting money right where it belongs, with shareholders. To understand the debate, you have to understand how stock buybacks work. The debate around stock buybacks has to do with how companies use their cash. They have access to quite a bit of it right now. The tax cuts in 2017, relatively high earnings, and low interest rates have all added to corporate cash stockpiles. When a company is flush, it has options for what to do with its money. It can buy other companies, it can spend on research and development, it can buy new equipment, buildings, or technologies, or it can return money to shareholders. This can take the form of dividends or stock buybacks. In the past 10 years, the top 20 companies on the S&P 500 bought back about $1.3 trillion in shares, with Apple leading the way by far. In a stock buyback, a company purchases its own shares from shareholders, and it takes them off the market, leaving fewer shares outstanding. This changes the math on the remaining shares in a key way. It boosts a metric called earnings per share, or EPS. The most basic equation for EPS is the company's net income divided by the number of outstanding shares. So when this number shrinks, the EPS rises. So if a company has a net income of $1,000 and has 100 shares outstanding, its EPS is $10. But if it buys back 10 of those shares, the EPS rises to $11.11. Higher per-share earnings make stocks look good. And analysts at the S&P Dow Jones Indices said that a little more than 1 in 5 companies on the S&P 500 reduced share counts by at least 4% through buybacks in the most recent quarter, boosting earnings per share. Stock buybacks can be a good deal for remaining shareholders. They tend to benefit executives because rising stock prices make their stock options more valuable. This is one of the criticisms of stock buybacks. The people who decide what to do with the extra cash often stand to benefit. Skeptics say that money is better used on growing the company. Here's a chart that looks at the change in business investment since 2013. You can see it's gone negative 3 times. Critics of buybacks say the practice is partly to blame for the lagging business investment. In 2019, Democratic Senators Chuck Schumer and Bernie Sanders argued that buybacks restrain companies from investing in R&D, equipment, higher wages, paid medical leave, retirement benefits, and worker training. And Republican Senator Marco Rubio of Florida unveiled a proposal that would change how investors are taxed when companies buy back shares. Analysts also say that another worrying sign is that buybacks have coincided with a rise in corporate debt levels. Some worry that companies are taking out debt to finance the stock buybacks. Proponents of buybacks say there's no real link between share repurchases and tepid capital investment, and that companies could be deferring investment for other reasons. Maybe they're pessimistic about future demand and economic growth, and they don't see attractive investment opportunities for the company. This camp says that if a company sees no profitable use of their money, they should return it to shareholders, who then have the choice to invest it on more profitable ventures. Some also say the rise in buybacks is overstated. Companies regularly issue stock as part of compensation, and the rise in buyback has partly served to offset those new shares. As this debate continues, one thing is clear. Buybacks are now a big part of the landscape of American finance. There's no sign that that's about to change.